Hi, this is a quick episode on what we do after a stock that we own meets its price target. First, I'll get rid of a couple of these drawings. We're looking at Garmin, GRMN, which I recommended a buy back on, where was that? I recommended to buy it back on April 24th. It's now May 5th. I recommended to buy it around the price of $34, and I actually entered at $34.03, and we had a target of $36. Now, taking a look at the chart here, so we get these out just to clear up the chart a bit. Taking a look at the chart, we had a breakout, we had a throwback, and then we had another breakout. And immediately on that day, and that was the earnings day, the price jumped up to $36, which was our target for short term, and then swung back down and had a highly volatile day. And today's day was once again highly volatile, but nonetheless less volatile. So it hit our target of $36. So what do we do now? We're not going to accept making this trade a losing trade. We want to preserve our profit. So I'm looking at this right now, and you have to develop your own system, really. Like this is my system, and of course develop your own, back test it, see if it works. These are my steps for selling after a stock hits price target, which I'll put right there. Step 1, and this is what I do personally. Once again, step 1, you want to see, and this is for selling, of course. For if you're going short, all the indicators that I say right now are opposite, but this is for selling a stock that you own. A negative divergence in the money flow, or in a money flow. So we have a negative divergence in the money flow index. That's pretty simple. Basically, all that means is that, say, the stock is going up here, but the money flow index is going down here. And I'm using an 11-day period because that's how long it was since the price broke out. But yeah, we see a top right there, and here's our negative divergence, which I'm drawing with this red line. Money flow index is going down. I'm using the Chaiken, Chikeen, money flow, and I like using it. It's really good for divergence analysis. And to complement that, we have the money flow index going down, and we have prices going up right there. That's the first step. Second step, we want a slow stochastic, we want a stochastic sell, preferably the slow. So I'll get rid of that money flow index. And here we have the fast stochastic in this area, and here we have the slow stochastic. Do we have a sell signal? No and no. Now what we can do, if we'd like, is we can edit it to make it more sensitive. I'll give it half the sensitivity on both the slow and the fast. I'll increase the sensitivity by 2 times, sorry. Alright, so what does this one tell us to do? The 5-day stochastic, and you have to adjust the time period depending on what trading period you're looking at. The fast stochastic actually gave us a buy, and the slow stochastic also gave us a buy, and that was yesterday, and the fast stochastic was the day before yesterday. So that one's not working for us yet. And finally, a significant trend line break, or a significant support level break. Now we zoom into the short-term chart. I'm going to the 20-day. And what does this look like? A symmetrical triangle. But let's bear in mind also, since this is very short term and it stopped at and it's made a vertical move, this could actually also be a flag. And if it is a flag formation, that would give us a price target of nearly $38. So what do we do in this case? Actually gives us a target of $38. If it breaks this trend line and closes below it, or if it has an explosive move through it tomorrow, that will count, but there's also a good chance of it breaking through this level up here. So those are your 3 steps. If all 3 of those line up, then exit the trade the next day on a hair trigger stop. And a hair trigger stop is 13 cents below the previous closing price. And note that 13 cents, it only works for stocks that are not very high priced. So it wouldn't work with Apple. It wouldn't work with Google. It'll work with this since it's a $35 stock, but not a stock that's over $100. You want to increase that to, say, maybe for a $100 stock, you could increase that to 26 cents, just because there's more there's a wider range each day that the stock trades in. All right, so there's our steps. After it hits the target, if there's a negative divergence in the money flow index, which there is in this stock, a stochastic sell, preferably the slow, but the fast is acceptable too. There is not in this stock, and a significant trend line or support level break. And once again, we zoom into here. Do we have a significant support level trend line break? We will not until it depends how touchy you are. If you want to get out at 34.87, go for it. But the next support level is at 34.50. Alright, hope it helps. If you have any questions, post in the comment box. Thank you for watching.